Good afternoon, everyone. Ian Maddox, Hitchcock Maddox Financial Partners, our weekly HMFP Financial Planning Simplified video series, connecting with you here on what is a postponed tax day. So happy tax day, if you can use that term, happy tax day. I wanted to talk a little bit about just kind of circling back on things that have transpired since the beginning of the year. First, some tax law changes and that really went into effect at the end of 2019, and then things that have happened here with COVID, which is kind of wild. But I'm not going to talk about the disease. I'm not going to talk about masks. I just want to talk about taxes and financial ramifications in that regard. So obviously we're delayed by a full quarter, both for individual tax filing. That happened automatically. You didn't have to do anything. You should know that by now, hopefully, as well as corporate filings, estimated payments for corporations, et cetera, et cetera. So everything has just been bumped back. And a couple of other things that have changed that I've touched on before but wanted to remind folks of is just kind of some things you can do to take advantage from a tax standpoint. One thing to remind you of, and this is really focused on one segment of our clientele and folks here in the community, which is those that are 65, 70 plus years of age, is that first, a reminder that the RMD age, the required minimum distribution age, has been extended. Okay, so it used to be 70 and a half. It is now 72. Again, we've covered this before, but this seems like an appropriate setting when we're talking about taxes and income distributions and all of these things that are supposed to be happening to cover it again. But I had an email from a client about another concept that we covered probably a year ago, more of an educational video on what's called qualified charitable donations or distributions, QCDs. And there's a little bit of nuance here because there was some confusion. 70 and a half is the benchmark for when you can actually do a QCD. And I'm not going to go back through. You can go into our archive on YouTube, go back there and find that video. Just understand that there are ways that you can take money out of a qualified account, okay? An IRA, money that's tax deferred, and give it direct to charity and have that income not taxable to you, okay? Bring in the RMD. This is where it gets a little complicated, is that at 70 and a half, prior to 2020, you had to take an RMD. Well, there was a unique way that you could have a QCD also qualify for your RMD. So the client emailed thinking that we were going to do those two things, and I said, well, by the way, remember, you don't have to take, you're not required to take an RMD now until you're 72. This particular individual was about to turn 70 and a half. However, this individual still wanted to take a QCD. So I said, okay, that's no problem because you can still do that. The 70 and a half is not changed, okay? Not changed for that particular process, for that strategy. It's just that you don't have to do an RMD. So you still can use a QCD for an RMD at 72, but you can begin that process of charitable donations, church, charity, whatever, directly from a qualified account. Perhaps you're already in the habit of doing that and you just want to have that money go direct to the charity and not have to pay income tax on that distribution. No problem at all to do that starting at 70 and a half. So just wanted that to be a reminder here on tax day because that's something that a lot of folks might use or potentially think about using as a tax advantage. If you haven't filed today and I'm telling you this is the deadline, just call your accountant real quick. You can still file for an extension and move it out into October if need be. And until next time, Ian Maddox, if we can help, just reach out any way you can.